Hello, Anthony.
Hello, Claudine.
We're here today to talk about tax evasion defense.
Yes.
And how people sometimes get it all wrong.
Yeah, and there's reasons why they get it wrong, because this is, I think, common sense. This is how common sense would work. Common sense would say, okay, in order to convict you of tax evasion, first the IRS has to do the whole civil charges, right? They have to go through the audit and say, hey, this is what you owe. Okay, and now looking at some circumstances behind what you owe and what you didn't pay, we're going to charge you with tax evasion.
Okay.
You know, you would think an IRS auditor has to get involved, and there'd be a lot of bookkeeping flying around going like that. And that's sort of how you think you might get an opportunity to sort of contest where they're coming up with things before it goes to a grand jury for indictment.
Right.
Yeah, but it doesn't. That's not how it works at all.
It's not.
No. The IRS doesn't have to have an auditor. There doesn't need to be an audit going on to convict you of tax evasion at all. And it's really counterintuitive how everything works. Mm-hmm. But if you understand how the dynamics works, then you can avoid sort of these surprises.
Okay.
And this is what I want you to think of. So tax evasion is a federal crime that requires the IRS to prove a specific intent that you intended to defraud the IRS of a tax due.
Right.
Okay. Now, I just said that they don't need to actually prove that what they don't need to do is prove an actual amount. They just have to prove some amount. Oh, it had to be at least, I don't know, $20,000. And actually, avoiding the payment of $1 in tax is really not. It's just like, you avoided some taxes, right? So there's no hardcore audit, forensic accounting going on.
That seems crazy.
Yeah, so it's a really low standard. You can just get someone on the IRS to say, well, it looks this, he was living like this, and he was paying money on escorts. It's always going to be something, interesting, good. Gambling, escorts, a lot of personal services things. The only way he could have done that was, from his income sources. And then they would say, well, tell me about his tax returns he's filed for the last years. Well, he didn't file any returns, or he stated his income was zero or had losses or something like that. Mm-hmm. That's what they'll say. And that's enough to prove, the jury could infer there had to be some income that wasn't reported in taxes not paying on. That's all that's required. So now, for the second part, they have to prove the specific intent. Well, he knew how to file returns, didn't file them. That's it.
There you go.
There you go. So now, here's the thing. You actually might not owe any taxes. Because if somebody has a huge loss on their tax return, they might still have a lot of money.
Right.
It could be from years' profits. Some of the richest people in the world are claiming losses. Hey, you said you had a loss here.
Yeah.
And that's actually what happened in a recent case. And it's pretty interesting. One of our favorite tax blogs, Procedurally Taxing, had just a great article on a case recently, and it had to do with collateral estoppel. And collateral estoppel is a phrasing of law. It means that if you claim something in one case, or if you claim one issue, you can't change your mind for a different issue. Mm-hmm. Or if something's decided in this case, you can't say it's decided in another way in a different case. And this case is it's so instructive of how it's so different, the tax evasion charge and the civil charge, because here the person was convicted of tax evasion.
Supposedly embezzled money.
Supposedly embezzled money. Okay, but whatever it was, he paid the person back. But they said, here's the payment he didn't report. So they convicted him of tax evasion. So he took this. He didn't put it on his return. Yeah, but then while he's going to trial, he never fixed his returns because there was something important. He had that unreported income, but he had an unreported expense too. Mm-hmm. So he ended up actually with a loss that he didn't report. However, he didn't amend that return until after he attempted to withdraw his plea of guilty, and I could kind of see why. He was given probably given bad advice by somebody. Somebody else came in and say, "Hey, what'd you do?" No, let's withdraw the plea. They don't have a case. We could prove you actually don't owe taxes.
Right.
Judge wouldn't hear it. So he was sentenced for tax evasion. Now what happens after he's sentenced for tax evasion for something he actually really didn't know? And you see, it's like the judge saw a factual basis. In order to take a plea agreement, the judge has to see a factual basis. Mm-hmm. Judge say, well, I see a factual basis for tax evasion. Well, here's the thing. When he amended his return, then he had it correctly. Here's the money I got from this guy, and here's my expenses going out. I actually had a loss. Wait, but here's the thing. For tax evasion, don't you have to evade taxes? The guy didn't actually evade any.
Right.
But the judge found a factual basis because he didn't have the whole story. Maybe he did. Maybe he didn't care. And that was really the standard. So what happened? Now the taxpayer, after he did after the sentence completely, he amends his return to say, this is really what I owe civilly. And now the IRS comes back to say, no, you pled guilty to the tax evasion. So what happens is the tax court says, no, he's right, because we actually don't need to prove, because you are in a criminal case, you guys get it easy because you don't have to prove a specific amount. So your standard is so easy. Here, it's a little higher.
Yeah.
And people have it backwards. They think the tax evasion is so hard. No way. In order to prove a specific amount civilly, it's a much harder job for the IRS.
Yep. I mean, we were talking about Al Capone.
Yep.
We potentially could have saved him from going to prison.
I would, right. There's a few things that went on that, and this is what people do routinely. This goes on all the time. And the mistakes that Al Capone's attorney made are the mistakes that are going on right today. Okay. So Al Capone, they public enemy number one. They wanted to take him down. They really were looking at using the income tax to do that. Yep. He didn't file returns. This guy's living large. Something must be going on.
Yep.
So, Al Capone is starting to take this serious. He hires a tax attorney in 1930 to say, hey, kind of do a voluntary disclosure, right? And it really was. He's like, hey, look, Al Capone made $26,000 in 1924, maybe 50 and 25, never more than $100,000.
Yeah.
That's the best we're willing to do. Okay. Now, and the prosecution says, no, we're not going to do that. And then they go on to a grand jury. Capone tries to plead guilty. The judge wanted to accept the plea and forces him to take a trial. Now, this is the thing. At trial, they used that letter the attorney sent to say, this is the best we can do. This is what we agree that Al owns for 24 to 30.
There's your willfulness.
Right. Well, here's the thing. He still didn't file a return. 1930, hey, look, man, you're under criminal investigation. You just said, I agree, I owe this.
Yep.
Yet you didn't file the returns and you didn't pay the taxes. So what is the part about an ongoing criminal investigation, about a grand jury indictment, that absolves you of your ability to file a tax return and pay your taxes to the best of your ability?
Nothing.
You
don't just wait until the dust settles.
No, and that's what they did.
Over,
well,
and then maybe.
And it's done. This is the thing that criminal tax attorneys do. The ones who don't quite get it. The good ones know, like, look, we know that the standard is different. The IRS actually doesn't have to prove the civil liability. However, if you go to say, all right, we're going to go through and correct all these and pay whatever we owe, you've made their case really, really hard.
Yes.
Because they look, I filed my taxes. Look, I realized I made a mistake.
Yep. I wanted to come clean.
I realized I was in noncompliance. I had someone else take a second look at it. This is really hard stuff to understand.
Yep.
And here it is. I corrected, paid everything. I'm in 100% compliance. No matter who you are, you shouldn't be too big or too small not to have to do your fair share in civic duty, whatever.
Exactly.
Instead of saying, well, wait a second, you have to do this, and you're just not going to do it. Because why? Because I just don't understand. I guess I do understand the mindset. People are just fixated on the criminal thing. And
I never would have thought of that, honestly.
Yeah. It's an interesting... so anyway, that was procedurally taxing, where it's a Polish name.
I was going to try to say it.
You want to try it?
No. You go first.
Senzin.
Senzian. Versus commissioner.
Yeah.
Yeah.
And I went to the Polish Catholic Church. I grew up there. Because it was a church next door to us. We're not Polish at all. But my dad's like, it's next door.
Very convenient.
And I still can't. Yeah, I'm still.
We'll put a link.
I would go to the Polish masses.
Yep.
I would go to those. I was like, okay, this is certainly a language.
Yeah, we'll put a link below.
Yeah.
So I think bottom line is, if you are being charged with criminal tax evasion, you should still pay your taxes.
You should still file your returns and pay whatever taxes you owe to the best of your ability. There is nothing special about a criminal investigation that absolves you of your liability. You have a responsibility and affirmative duty that is non-delegable to file your tax returns. So why do you stop? And if you made a mistake, and if you know you made a mistake, fix it as soon as you can and pay it, because here's the other thing too. People sit around and wait to pay the taxes. Till we don't want to pay the taxes until after setting. Yeah, let's find out. Whoa. Hang on a second, because this is what happens. When you plead, 90% of cases do plead, or if you're found guilty. Either way. Well, the judge looks at how long you should go to jail. They're going to look at the sentencing guidelines. Sentencing guidelines are how much they owe.
Oh, okay.
Oh, here we go. But if there's like, no, we don't actually owe anything now. Oh, all right. Well, I guess home release or something like that, as opposed to 3 years for something you're going to pay anyway. That's what happened. And the other thing, too, is that the IRS can double dip. That criminal charge can have an order of restitution. Mm-hmm. And then like, okay, you owe $1 million of restitution. And then the IRS could wait years to hit you with that civil liability. Two different things.
Oh, wow.
The restitution stays around forever.
Yep.
And then your tax bills, your Title 26 that has a 10-year statute on collections. But you could end up paying two different bills instead of doing it once. And getting the right amount, paying it. That's really the thing. So this is how things are done. I hope people understand how things work and how you could use your own compliance in your favor to reduce the chances of something really bad happening at a criminal trial. And then if something bad happens, mitigate that risk.
Got it. Okay, well, if you need help with any sort of tax problem, you can visit us at irsmedic.com for more information. You can like and comment below. And thanks for watching. IRS Medic, the law offices of Parent LLP, real tax attorneys for tough tax problems.